Good afternoon, everybody. How are you? Good to see everybody here today. Lots of people here today. Good, 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 good. We won't spend too much time today with PowerPoints today. I want to get right to the charts this afternoon. First of all, welcome everybody. Good to see you. It is an honor and a privilege to be working with you. I want to share a little bit about the predictivity of markets. And I was working with someone earlier this week. You heard me mention KJ. Well, we're talking now. Go ahead, type any questions you have into here. Dave's also here too, KJ, and he can help answer questions while we're together. And I mentioned that there were different ways to predict market movements. And I want to show you a couple examples today of ways that you can, as a trader, anticipate when in the future and in what direction the market you trade is going to travel. And so we're going to spend the majority of our time in the center column. But over the last 15 years or so, I've uncovered or studied quite intensely 3 different ways that markets are predictable reliably. And one of the first ways I want to show you encompasses 2 things that we're going to use when we look at data mining. One is oscillation, and the other is in regards to timing patterns. Let me show you what I mean. How many people here trade oil futures? Anybody? Anybody here trade oil futures? Crude CL06-23. Okay, quite a lot of you. All right. So let's take a look at something that I found quite curious a number of years ago, and it's still applicable today. And this is something you can use on your own. You don't need me for it. Just stand by a second. I wanted to prepare this chart. I didn't quite get enough time today. So for a number of years, over a century now, people have known, people on the order of William Delbert Gann, J.P. Morgan, lots of names that you would recognize, that markets were predictable. And it's not something that people talk about much on TV or on the news or whichever. Can everybody see this chart okay? Sometimes people can't see the colors because of color blindness or things like that. All right, perfect. So this is going to sound a little weird, but just pretend for a minute that these signals were predictive. We knew they were coming weeks in advance on a daily chart. I'm not going to tell you where they're from in case you don't know just yet, but I want you to look at the majority of the signals that produce moves in the directions that were anticipated. So if I told you we were waiting for a selling pressure signal on November 23rd, and when we arrived there, it actually fell, that's kind of what I'm talking about. Same thing for this signal. When we were watching on December 7th for a predictive move up, we see that sort of came to fruition, right? And if I work my way to the lowest hanging pieces of fruit on this oil futures chart, we would see that the majority of the time, most of the signals, more than half of them, are sort of doing what's anticipated. And then we have some anomalies. 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 We have these weird guys right here, right? A couple signals that don't work out very well. In your GoToWebinar handouts section, You'll see a book posted now for a number of years, last 6 years at least. It's called A Hitchhiker's Guide to the Histograms. And over the last 15 years or so, I've noticed, and we've documented several patterns that predict reverse polarity at the predictive times. Say that 10 times fast. Reverse polarity at the predictive times. Reverse polarity, I can't do it. For example, we noticed that without discretion, mechanically rules-based, if we arrive at a predictive selling pressure time, like the red dots in our example, and either the signal candle itself, the candle to the left, or the candle to the right are brand new structural lows in relation to the prior swing. That is to say, if the selling pressure candle, the predictive time, the candle to the left or the right, if any one of those three put in a lower low in relation to the prior swing low, Luke, it tends to reverse and go in the other direction. Does that make sense? Red turns into essentially green. Well, if we look at the chart, you'll notice that the diagram here on the left side of the computer monitor matches identically with what took place on March 20th. Chris, does that make sense? Chris with a K? We have the selling pressure signal, which appeared on March 21st, and the candle to the left of it on March 20th, number one in our example, is the lowest low of the three possible candidates. And so this mechanical definition, this translation, if you will, of a pattern based in time gives us permission to put a green arrow underneath here. That, in fact, is a pattern 4. And pattern 4s generally do what? They reverse and go up. In your book, it talks a lot about it. And there's some things there that we can take advantage of in terms of how to trade it. But in this example, this predictive signal on the daily crude chart behaves exactly as an example from 2016 on a 1-minute NQ chart. Inside of predictive times are patterns. Think of them like Egyptian hieroglyphics that we didn't know the definitions of. Man with bowl standing next to dog equals annual moon feast. Piece of corn next to a bowl equals dinner. But until we know what the definitions are, we're kind of in the dark as to the translation. Well, in this case, selling pressure signal at a lower low equals reverse polarity, or pattern 4. And that's pretty helpful because it gives us some insight as to what to expect at those times. Now, for every pattern 4, there's a definition of a pattern 5. If we arrive at a buying pressure signal, a predictive buying pressure signal time, and either the signal candle itself, the candle to the right or the candle to the left, is a higher structural high in relation to the prior swing, the market tends to reverse. Predictive buy time, higher high equals selling pressure. The pattern flips. Reverse polarity is a good way to describe it. Well, if we apply that definition to our oil chart, we'll see that candle number 2 of the pattern on October 10th and candle number 1 were successively higher highs. So they each inherit a red arrow. And then the same thing occurs on candle number 1 on November 7th. The signal candle isn't a higher high, but the candle to the left of it is. So both of these now inherit red arrows with the number 5 above them. Okay, who's with me so far? Everybody keeping up? Take a look. And we're going to have to spread it out to see this one. Chris, can you see how this candle number 2 is higher than the previous high swing? Does it meet our definition of a pattern 5? Candle number 2 is a higher structural high than the prior swing high. So Chris, am I allowed to give it a red arrow like our example? Would everybody say it's okay? Did I lose everyone? Am I running 100 miles an hour down a hill and you guys are all up top? Okay, cool. So I'm going to give that one a red signal. The same thing would have to apply here, because at this green signal, this was an even higher high than the prior structural swings. Okay, so now let's go back and take a look at this oil futures chart. And now out of the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 11 of them are kind of marking the exact high or the exact low of these daily turns. There's one that's kind of misbehaving. It's off by sort of 1 day over here. We're not going to fudge it or curve fit it. We'll just say didn't work out as well as we'd hoped. Okay. Now, in the book, it even talks about how to trade these patterns. For example, when we have a pattern 5, this is from 6 years ago, Chris, sometimes we notice that the 5 will pull down a little bit and then work its way back towards the high. And in here, we have a way to trade that. Pattern 5 trend continuation. We put an entry 1 or 2 ticks above the high that generated these red arrows. So in the case of oil, if we put our breakout right here, you could have been long with a swing trade with a stop just below the low of about, what is that, 62 points, 62 ticks. And afterwards it broke out and went 161 ticks using a book that I wrote 6 years ago. So when we look at these signals, there's another pattern 4, and there's another pattern 5. When we look at these signals, we have to deal with an uncomfortable truth. And the uncomfortable truth is these signals aren't derived from anything people are comfortable with. Everywhere you see a large green dot is the date of a full moon in oil futures, not specifically relegated to oil, just the event. And I want you to think about that, because what's weird to you is that if this was working as well as I'm demonstrating, someone would have told you by now. You'd have heard about this in a forum somewhere. Someone on TV or CNBC would surely be mentioning, hey, we have a pattern 5 full moon signal today. We're expecting oil prices to drop down. And for the last 15 years, for the life of me, I haven't met anyone yet in the mainstream media or any type of marketing program. In fact, CNBC, if we come here and go to look at it, stocks close higher Thursday, S&P 500 notches highest close since February. Is there anything here about the oil? No. No one makes mention of it. And I know what the dates of these signals will be for the next 100 years. We can go online. And we can ask Google, hey, when are the signals coming? Here you go. So Chris, does that meet the definition of predictive? Are oil futures predictive in the sense that I know when the dates of these next signals are coming? KJ? You had a lot of energy during our call, and I'm kind of reviewing some of the things we spoke about. Is one of the most unpredictable markets in the world entirely predictive? Yeah. Boy, it sure looks that way. Now, a lot of people dismiss it. It comes from me. You heard it in the webinar. It sounds weird, but before we move on, I want you to just look at it and consider it. Don't ask why or how. I can tell you how and why. It's taken most of my adult life to prove why this works. There's a scientific reason for it that's been proven in double-blind studies with actual doctors. I know why this works. But look at it as a signal. In the upper right-hand corner of this screen, I know when the next signal is coming. Now, stay with me. I'm going to load another chart that's very popular. You might have heard of this company. They make iPhones. They're rumored to be working on an electric car and AR, VR goggles, which are set to revolutionize the world as we know it. And it's a little company called Apple. Well, check this out. And again, just see it for what it is. Let's just look at it for what it is. I'm going to move the signals a little farther away because the dots get lost. And I promise we're moving towards something very useful here. So what would you guys say generally happens to the price of Apple stock when we're near a green dot? And what would you say generally happens to the price of Apple stock near a red dot? Those of you that have traded options, for example. That's right. It goes up and goes down. Well, here's the weird thing about Apple. Every little green dot is a first quarter phase, and every little red dot is a third quarter phase. That's a moon half full and a moon half empty. And it doesn't take a genius to see if you want to buy Apple and you're looking for opportunities to buy Apple and place calls or add to a position, that a first quarter phase is a pretty good bet most of the time, without pattern 4s and 5s, just straight out of the gate. And as we go back and look further and further back in time, Earl, first quarter phase, let's look and measure if you bought and sold Apple from the first quarter to the third quarter. Ready? Open to close, open to close, negative 77, open to close, positive $1.15, open to close, $7.57. So plus 5, plus 1, plus 750, minus 3/4. Open to close, $2. Open to close, 4.5. Open to close, there's a loss, minus 8. Open to close, plus 9. Open to close, plus 11.5. Open to close, plus 4. And again, if I search for this, there's no mention of it. In fact, me just mentioning this to you, me just saying it to you and telling you where the signals are coming from, I've ostracized about 90% of people in this room. I have customers that make thousands and thousands of dollars with the signals. They don't care where it's from. In fact, there was a story not too long ago. Mouse trades cryptocurrency. There was a mouse in a hamster wheel. And the guy had it set up where the mouse would run on the hamster wheel, and whichever tube he ran through next, he would buy and sell cryptocurrency. And people were following this. It was a big thing. He had a better trading record than Warren Buffett. I'll paste the link to the article in your chat box. It's actually a really cool story, I think. But when we look at something that people have been using for quite some time, in fact, one of the very first and wealthiest people in the history of the financial universe, this guy, whoops. It seems like the only people paying attention to predictive times are the wealthiest people in our society. They honestly could give a rat's butt what you or I think about their quote-unquote ludicrous, crazy, hippy-dippy tree hugging methodologies. Any questions about that so far? So remember what I just showed you about the oil on a daily chart. There's a couple things that take place. Number one, you'll see the signals are oscillating from positive to negative to positive to negative to positive to negative. Number two, we know when the next signal is coming up. And we have a dictionary of patterns that we can apply to interpret what's likely to happen at that time. Well, earlier this week, you guys all had access to charts that look like this. And for those of you that are taking the trial, there was a web page. And the web page, curious though it was, had predictive times for markets like oil and gold, the E-mini S&P, the Dow, the DAX, Euro dollar, and so forth. And we're going to use a different method now that we know how prevalent predictive times are, with something as innocuous and available to the public as a lunar cycle. We're going to go progressively deeper into the data mining hole. Data mining uses a little bit more science. It's a little bit more complicated, but it presumes that we're sort of moving around in the fabric of time. Einstein spoke about how the universe had dimensions of space and time. Gann, who was a fervent student of science, understood how important time was to society and to how the universe works. And so if we take a computer algorithm and we turn it loose and look for predictive times that are recurring lately, it wouldn't be a surprise to see that something, in fact, was happening equally as interesting and hopefully equally as potentially profitable as the signals we just looked at with first and third quarters and full and new moons. This diagram for oil has been available in the public domain since Tuesday of this week, meaning the times on this chart, the colors of this chart, were available for people to view and anticipate since Tuesday. Today is Thursday, so it's been 2 full days since they were published to my website and available for public review. The blue times on the chart represent temporal anomalies. These are times that the algorithm now has detected ripples in the market's behavior. So 1049, 1015, 951, 922, these are times lately in the last several thousand bars of oil's movements that something strange has been happening. Something has been happening often enough that the algorithm independently, without emotion, no guru marketing funnels, its only job to say, hey, at 101, I keep finding people pushing the price of oil lower. I'm going down, 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 down. That's the only reason that signal is there, not because of my guru acumen or some proprietary black box, blah, blah, blah. The only reason 101 is there, Eastern time, is because something fishy's been happening at 101 in oil a lot lately. And hopefully your minds have expanded just enough to know what that could mean. On the bottom, the times here, 11:31, 11:20, 10:59, they represent times where people have been buying. And that's the only reason they're there. Now, if you have the software already, you, of course, don't get the marketing emails from me. You have the software. You can get it yourself. You have the ability to see it. But here's the interesting question for those of you that are here that don't own the program. Did it work or not? KJ, did it work or not? So we're going to take these times now and we're going to overlay them on top of today's price action. And if you're nervous about whether or not I changed any of the times, 942, 951, 1006, 42, 51, 1006, 42, 51, 1006. KJ, everyone else, what generally happened at the blue times that we were expecting selling pressure in oil futures 2 days after the predictive times were published? most of the time. Not all of the time. If it was all of the time, I wouldn't sell it to anybody. I'd be with my new friends. Old Ron White joke, the comedian Ron White. He talks about how his wife is, she comes from money. And he jokes that if his wife ever passes away and you don't see him, don't come looking for him because he'll be with his new friends. Anyway, what generally happens at the blue times? What generally happens at the white times? You can change these colors. I wanted to make it look cool and futuristic, so I went with blue and white. Anybody? This is a program. This is something you can talk to your friends in church about and not feel like they're going to kick you out because you're into astrology with the moon. This has scientific legs. It's not astronomical. So if the first example kind of freaked you out a little bit, this one should feel more comfortable. Warp identifies the times lately where the market you trade normally is atypically repetitive. And what it does is it reminds you in the future, hey, before you go long at 9:36, remember, this is a behavioral short time. And banks are wanting you to buy into their shorts. It's warning you hours into the future at 2:32, do not buy right now. This is a behavioral short time. They're not going to go up through the higher high. They're going to stop you out and reverse. Be patient. The buy time is coming, maybe in 14 minutes. Any questions about this? Because it's two different ways to prove that markets are predictive. Our company's name is Back to the Future. Trading is about the future. Where will the price of the market be in the future? If it was the way most people trade, you would bet on where the price of the market is right now or where it was. Because most of you use lagging indicators that tell you something is happening right now, or this is what's been happening over the last 5, 10, 15 bars. That's not trading. We all know what happened 5 bars ago. We all know what the market delta was, what the order flow was, what the volume is. We can all see it. Trading is about where will the price be in the future. And so I can use this to prove to you that it exists. Times published 2 days ago. Here we are 2 days later. I can also use this, something in the public domain that you can fact check me on. And both of them work. They've been working for quite some time. If you go back years into the past of oil, it's been doing the same things over and over and over again. Why hasn't anyone told me about this? Because they don't want you to know. They don't want you to know. Any questions? Okay. Thank you, oil. You're welcome, Michael. If we apply this to larger time frames, and for those of you at home, I've been doing more work on the S&P daily chart. My settings for this example are trading days for the origination mode, 1, 2, 3, 0, with a swing strength of 5. When we allow the algorithm to go back in time and on a daily scale, scan for moves that are likely to occur. The chart is divided into two halves. This dotted white line in the histogram panel marks where we are in time right now. If we were singing karaoke, that is where the bouncing ball would be. This is the song, the note, the word you're singing right now. The great part about karaoke is you can see the words you're going to be singing in the future. In the future. So these are the times and dates on the right-hand side of the chart. Now, it bears mentioning because my colleagues in this extremely corrupt industry are guilty of a multitude of sins. So I have to say this. These signals do not repaint. They also do not recalculate. They also do not disappear. These signals are the signals, are the signals, are the signals. You can backtest them. You can trust they will be there in an hour, in a day, in a week. And so the signals using data mining give us an even deeper insight into when markets like the S&P, Ravi, are expected to go higher and for how long. So if we look at the price action lately, there are some things about this market we can discern. There are some things about this market we can discern. I'm going to teach you something that I use on a chart like this. How high will the S&P potentially go? Here's a technique that you can use. You can measure from the low of each of the white dots to how high it went before the next blue dot for each of the signals. So check this out. From the low to the high. From the low, that's as high as it went right there. From the low to the high of where it went, how far did it move when it was time for it to move? I call this an exertion analysis. From the low to how high it actually went by the next signal. You can do this for the last 5 or 10 signals. Intraday, you can also do it on a daily or even a weekly chart. And now, once we have those triangles, Earl, I want you to pluck them like berries from a tree and put them over here. Berries from a bush. Berries don't grow on trees, I don't think. And I'm just grabbing and aligning the corner with all the other signals. You catch what I'm laying down here? How far might the ES go before the next blue dot on April 20th? Well, when we, let's put it like there, like that. When we do it this way, something really cool happens. Inevitably, when you do an exertion analysis, David, there are 3 levels that will appear. A minimum, a median, and a maximum. Call it the outlier, the weirdo move. So Larry, check this out. Can you guys see where the minimum is? Larry, it's kind of right in here, isn't it? You got 2 or 3 triangles that line up right there. 1, 2, and then a third one right here. So the minimum is here. The median is somewhere in that range. That's where it goes most of the time. And then you got the freakazoid up here, right? The outlier. So check out this. We're not too far away from the minimum. 4194, 4197 to 4200. And inevitably, what happens when I do this on public forums, on Facebook and groups I'm a member of, it'll come up, hit that level, and then come down. And then it'll come back, if it's going to continue higher, into this level and come down. So if you're choosing to trade calls, you can buy up into the minimum and the median. If you're a counter trend trader, you can place puts at the level where it might drop and new forces are marshaled. But all of that is available to us, and we're looking at the future. We're basing the decisions on the patterns in the market that already exist. And when we rely on them, we can see historically they don't let us down too often. So I expect this signal, which is in line with a full moon now, that'll blow your noggin a little bit, right? To push us up into the minimum, 94 to 200. When? Before April 20th. Before April 20th. Did everyone follow that example? Did I do anything that wasn't too hard or was too hard? There was a guy who could do this. In fact, he was so good they followed him and wrote it down. Earlier this year, Mr. Gann figured that the top of the advance would fall on a certain day in August and calculated the prices at which the Dow Jones averages would then stand. The market culminated on the exact day and within 0.4% of the figures predicted. Raja, I already mentioned the settings. Go back and watch the video. No, that would be mean. I'll show you again. But I did mention them. 1, 2, 3, 0, swing strength 5, trading days. I'm doing something that Gann did 130, 50, 60 years ago with a computer. With a computer. Now, when we look at the market, we have an opportunity to participate as traders. And many of you have been doing really well. In our Skype group, one of the members in my community posted his results for today in the market. Finished $227 on the micro NQ 3-minute chart. That's $2,200 with a full size account. What signals did he trade? And how did he No, Drew, more in terms of how far I'm expecting it to go. The next time signal tells me how long it has to go. So before we leave here, Drew, in that example, the distances between the triangles will vary, which is why I try to put the corners of them together like that. That's probably a better way for me to do it. Yep, right there like that. you'll see that most of them actually have the same block of time. So Drew, can you see how most of the triangles occupy a 6 or 7 day window? And that's sort of in line with our April 20th. It shouldn't have any problems getting to the minimum and the median before April 20th. There's another way to know if the signal is correct, Drew. And one of the ways that I use is to see what the media wants me to believe. And lately, everyone wants me to think that a recession is coming, like now. I can't find it. There were articles on here before on CNN, Fox News, CNBC. The word recession keeps popping up. There's going to be a recession. And they'll start talking about selling. Everyone should sell right when they're getting ready to push the market higher. And then, Drew, right when the market's about to fall, you'll hear Jamie Dimon from JP Morgan give an interview about how it's a soft landing and we averted the bank crisis and everyone should get in the market now. Stocks are a high probability value add. And then 2 weeks later, he's talking about the recession and everyone's sitting at home like a human ping pong ball. So I listen to what they say, I look at the chart, and I generally see the opposite. People are lying to you. There is a wizard behind the curtain pushing the buttons and turning the dials. So we talked a lot about the signals, the up, down, red, green, what happens when we get to the signal. And we see that 60 to 70% of the time or more, the signal that we're waiting for produces a move in the direction we were expecting, whether it's oil with an energy-based chart like the full and new moons, or oil, for example, on the chart we were just looking at on a 1 minute chart, the Roadrunner chart. It would be completely random and idiotic to assume they had a plan, but the banks had a plan today for when they were going to buy and sell oil. It behooves them to lie to us, to put us in a frame of mind to purchase when we should be selling, sell when we should be purchasing. So in a chart like this, Drew, as it's breaking the high and we're coming into 1110, can you imagine how many hundreds of thousands of traders are wondering why their longs aren't going any higher here? Minutes before 1110, every retail trader in the world is convinced we're going back to $90, $85. We're going to go up. And then they run the stop. They do the same thing over here. There's a pretty big swing low to the left. And then, Drew, we come and we break that low right here. And everyone's sure it's going to fall forever right before the buy time, and it drops up. These guys corner the market on manipulation, no pun intended. We're going to look at a setup. How do I trade this? How did our friend in the Skype group trade his micro NQ today? We look for something called signals with trend. So I'm using another chart that we gave you the predictions for, one that everyone was asking me about, a lot of people today before the webinar. And that's the Dow, the same market I referenced in my GAN interview. And in the Dow chart, let me pull that back up here so we have it. In the Dow chart for today, we had times that were available to us. We've had these times since Tuesday. 212, 254, all the way through the close, 327, 421 Eastern. Well, what do we do with those times? What do we do with them when we get there? There's actually a pretty cool system that I included in my predictions page, and I've shown this to you innumerable times. When we have a signal in the direction of the trend, in this case, a 120 period moving average, those of you coming to my Edge event are going to learn an entirely new way to monitor trend without any lagging indicators, a predictive trend. We've seen the emails for it. You got to respond soon because the class is coming up pretty quick. When we have a signal in the direction of the trend, Drew, I enter at the close of the candle. Ready? Close of the candle. My stop is 1.5 ATR values, average true range values, away from the low of the candle for a buy, from the high of the candle in a sell. I enter and then exit by the close of the next signal in the direction of the trend. When we get to the white dot, the next buy time, I enter at the close of the candle. My stop is 1.5 ATR values away, and I exit by the following selling pressure signal. When I get to the next buy time in the direction of the trend, I enter at the close of the candle. My stop is 1.5 ATR values away, and I exit by the selling pressure signal, the next time coming up. And I'm basing the trades on the established behavior pattern. Remember, these dots only exist, these times only exist because they're a behavior pattern lately. They're a behavior pattern lately. I have a behavior pattern in my neighborhood. Tell me if you have a similar one where you live. On my street, there are houses on either side of the street. And a curious thing happens, Greg. If Bill comes out with his lawnmower and he starts mowing his lawn, in my neighborhood that same afternoon, at least half of the other neighbors, when they hear that sound, it's like the Chemlon ice cream man. La 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 la, time to mow your lawn. It's time to mow your lawn now. They can't stand the fact that the first guy is mowing and they're not. You can listen out the window and hear vroom, 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 vroom. They all start up like a coordinated terrorist attack on grass. It's a behavior pattern in my neighborhood. And the same thing is happening here. I want to be a long trader while everyone is being long in a window of time that banks and other institutions are usually long. So let's look at our example with a setup. We had the CPI report today. Shockingly, who could have predicted? 8:33, the candle opens and closes higher at the Dow forecast time. We enter at the close of the candle. We exit at the close of the candle. 7 ticks. At 10:06, we're below the moving average. At 10:09, we're below the moving average. At 10:12, we close above the moving average. We enter at the close of that candle. Our stop is 1 to 2 ticks below the candle that crossed over. Are you making this up? No. It's called a crossover signal. We enter at the close of the candle. We put our stop 1 to 2 ticks below the candle that closed in the direction of the trend. And if we did that in the Dow today, from here until the close of the 10:33 signal, that's a 60 tick move, $300. The next signal is at 10:45. Our stop is 1.5 ATR values away. We enter at the close of the candle. We exit at the close of the 11:15 candle, 45 ticks, $200 more. 12:03, let's trade through lunchtime. We enter at the close and boop, we pull out a whopping tick. Hey, it's a tick. 12:48 is a signal in the direction of the trend. We enter at the close. We exit at the close of the 12:54 signal. There's a $200, $300 move. 1:03 is the next signal. At the close of the candle, it's the bottom of the pullback, and up we ride into 127. That's a 58 tick move, call it 50. So $250 move. 151 to 236 is a $150 move. And then at the end of the day, 127, let's go to the close. I think we finish 4 ticks down. So we can apply a trend setup, a rules-based, mechanical, discretion-free setup using something that I taught you in this webinar over and over and over and over and over again. And an example from 2022, June of 2022, a year later, is doing the same thing. La misma cosa. Right? And we can apply this to oil. We can go back and use that same example that we were looking at a moment ago with the moving average and do the same thing, right? And a quick recap: close below the moving average, exit at the next time, plus $110. Close below the moving average, exit at the next time, $110. Close above the moving average, crossover trade, exit at the next signal, plus $60. Enter at the white dot, exit at the blue dot, plus $170. Enter at the white dot, exit at the blue dot, plus $150, and so on. The shorts on the bottom doing the exact opposite. And so my hope is that at the end of this webinar, I've sort of proven to you across 2 different dimensions that you've been lied to. All these years, you've been lied to by your gurus, who, in my opinion, are weak-brained and closet marketers who just want your money. You're a number and a receipt. They are a pop-up restaurant serving lagging empanadas. They shut down and they reopen with a different name. Avoid the SEC at all costs. You've been lied to by the pundits, people like Jim Cramer on TV, who always tell people to get into the banks and then scream bloody murder when the banks fall apart and how the government needs to save them. People like Kevin O'Leary. Who do we listen to? Idiots on Shark Tank. I didn't know. I had no idea. I just took $15 million to be a spokesman. Did you give the money back? I didn't know. We're being lied to. And something as simple as this has existed in the public domain for thousands of years. King Solomon, in the book of Ecclesiastes of the Old Testament, everything that has been will be again. History repeats itself, it says in the New Living Translation. There is nothing new under the sun. Everything that's happened is going to happen again. There's a cycle. There's a time to weep, a time to be happy, a time to mourn. Opposite, remember? Happy, sad, mourning, happiness, planting, harvest, positive, negative, positive, negative. It's encoded in our holy books, in our traditions. And at one point, we all started falling for this garbage. And 15 years ago, my partner and I, another engineer, we decided to look at what's really going on. And I hope I've proved to you today that there's a little more to it than what the liars have been teaching and telling you. It's not as hard as you're making it. The answers are actually much easier than you've been led to believe. Now, here's the hard part. The word repent in the Greek means to turn 180 degrees. It means to change direction. And some of you are ready to change direction. Intention without action is meaningless. So some of you are sitting here. I've just posted a link in your chat box. If you could take a look at that and click on it for me. Some of you, you say the same words to me. Michael, this is fascinating. Michael, this is very interesting. I'm very interested. Some of you met with me this week. You said those words to me. It's very interesting, extremely enlightening. Intention. And then the phone doesn't ring and the emails stop being answered. Something comes up. Something always comes up. I had a wedding. I had a funeral. I had a bar mitzvah. I cooked some matzah. Always something comes up. Intention without action is meaningless. It's called a wishy-washy word. If you want to change, if you want to have this for yourself, something that's been taught for over 150 years, something our ancestors all knew about, and we've been asleep at the wheel and forgotten. We gave control to the masters at the wheel, the financial juggernauts. There's a recession coming. Oh, I better call my broker. Markets look like they're getting better. Oh, I better call my broker. And then you're 72 years old working in a Wendy's, making chili. There's a better way. If you click on this orange button, there will be an annoying pop-up that lets you know we have a live trade room that works with existing customers. If you want the software and you want to see it run and you want to watch somebody trade it live and get your hand held for a little while, if you're a visual learner like that, there's a room for you once you're a customer. If you don't need that and you're kind of a go-it-alone solo guy, you're a member of a multi-thousand person Discord, you don't need that, no worries. There is a promo code, WARPOFF. 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 All one word, no spaces, all lowercase. Warp off. Something New Yorker might yell at a cab. Hey, warp off! Takes $500 off the price. I'm told by people who are better marketers than I that giving you a time-sensitive incentive to purchase will assist you with your decision. I don't know. It's $500 off if you put the promo code in there. You're going to get 2 computer licenses. 2 computer licenses. And split it with a friend if you want. Give one to your Uncle Bill. Give one to Aunt Susan. One to your weird neighbor Freddie across the street who trades with you on Discord. You get 2 computer licenses. It's a lifetime license. No update fees, no additional charges, one charge. It's on your computer. It's a NinjaTrader indicator. NinjaTrader will automatically connect to itself, to Interactive Brokers, forex.com. It'll connect to Rhythmic. a bunch of other data feeds, including, what's the other one? TD Ameritrade. Lots of ways to connect to NinjaTrader. You get the promo code. You're going to get lifetime access to our video archive, Lava. Lifetime access video training archive. Everything you need to know about this program, including what I've taught you here today, is available in perpetuity once you purchase. We are in business now for close to 15 years. And here's a fun fact. We pay about $6,000 a year to participate with a company called Trustpilot. And many of you try to convince me that this is meaningless. Well, let me tell you why I pay $6,000 a year to be part of Trustpilot. Every customer on here wrote a review that I can't delete or edit. Every person who wrote on here can write a review. If you are not a customer, I can tell Trustpilot, hey, this person never purchased anything, and they will take your review down after giving you a month to send them a receipt or a screenshot of an invoice. So anyone who's a customer can post a review. All I can do is respond. They're real people with different IP addresses, and they all say the same thing. In fact, we have a near perfect rating after 15 years. That should mean something. And some of you are so cynical and jaded at this point in your career, you still don't believe it. Real people with real receipts with real results. $500 off, TachEon Warp. Oh, free installation as well. Once your software purchase goes through, we can make an appointment with you to install it. White glove service via GoToMeeting to make sure everything installs correctly. Thank you, Drew. We appreciate you. And those of you that are existing customers, I hope that I teach something a little different at each of these events. I hope that there's something you're able to pull out of here and use. I try to mix it up and not rely on the PowerPoint as often as I do sometimes. And I'm appreciative of your support. Thank you. So I try to always make sure we're learning something each week as we go deeper together. Always a different spin. Exactly. That's my goal. Now, listen, get started. If you get an email or a phone call from a guy named David, he works with us. He is the onboarder. Dave is great. If you have a question or a concern, or you want to trade a couple truckloads of apples for a warp license, he will find a way to get you on board. The man is quite honestly a genius. Please respond to his emails and phone calls. You will hear something you like. He is empowered to do those things on our behalf, and it's our privilege to have him help you find a way to have this and change and see the results that you want to see based on something that before you attended you thought was impossible. Now proven to you across two different dimensions. Publicly available data that you can go back and backtest for yourself with the patterns that I've given you, and the forecasts that you trialed for 2 days. It all worked. I'm just a chubby, middle-aged, balding dude in an attic office somewhere. Time has existed and can be harnessed and harvested right now. You can have the times for tomorrow, for Monday, for Tuesday, right now, in any market you trade. Intention without action is meaningless. My father would say it's as useless as a screen door on a submarine. Dad was great with those analogies. I miss him. May the wind be at your back. May the beautiful golden sun shine upon our tired, ashy faces. May the valleys of adversity rise up to meet us. and the mountains, the obstacles before us lay low as we move forward into 2023 this summer together. I wish you peace, fellowship, all that you wish for yourself. I come alongside you today and agree with you for that for you. Those of you on the journey with us already, thank you for your support. We love you. We appreciate you. We never stop innovating on your behalf to make sure you have institutional grade tools at your disposal. So it's a fair fight. Have a great night. Welcome on board to those of you signing up. And again, if Dave gives you a call or writes you an email, I promise you it'll be a great time. You'll be the better for it. Have a great night, everyone. I'll talk to you soon. Take care.